Asian markets tumbled on Monday, April 7, 2025, as the US-China trade war escalated. Investors reacted with alarm to the imposition of new tariffs. The losses were widespread and significant, reflecting the deep anxiety about the future of global trade. Japan's Nikkei 225 index plummeted by 8%, its most severe drop since October 2023. The broader Topix index also plunged, ending the day down 8%. Hong Kong's Hang Seng Index experienced a bloodbath, falling by a staggering 12%. Tech giants like Alibaba and Tencent were not spared, dropping 14% and 10% respectively. China's benchmark Shanghai Composite Index sank 6.7%, with the CSI 300 Index tracking the largest listed companies in Shanghai and Shenzhen, tumbling 7.5%. South Korea's Kospi Index was down 4.8%, triggering a temporary trading halt. Taiwan's TAIEX Index mirrored the regional trend, plunging 9.7%, with tech heavyweights Taiwan Semiconductor Manufacturing Company, TSMC, and Foxconn each plummeting 10%. This decline triggered circuit breakers designed to halt trading during periods of extreme volatility. The shockwaves from the escalating trade war were felt far beyond Asia. U.S. stock futures tumbled on Sunday evening, April 6th, indicating a bleak start to the week for Wall Street. The S&P 500 index is now nearing bear market territory, having fallen nearly 20% from its recent peak. The impact on other major economies has also been significant. Australia's ASX 200 index plunged 6.3% during intraday trading before closing down 4.2%. This represents a significant pullback from its February high. New Zealand's NZX 50 index also suffered a setback, declining 3.7%. Global leaders have expressed concern over the escalating trade tensions. Japanese Prime Minister Ishiba has pledged to appeal to the United States for tariff reductions. Taiwanese President Lai has vowed to negotiate with the U.S. for tariff elimination and address non-tariff barriers. European leaders are also closely monitoring the situation. A Greek central banker warned that the trade war could shave 0.5% to 1% off Eurozone economic growth. The European Union is considering countermeasures, potentially targeting up to $28 billion worth of U.S. imports. The global economic outlook has darkened considerably in the wake of the trade war escalation. Oil prices have fallen sharply, with Brent crude futures down over 2.4%, and West Texas Intermediate (WTI) crude futures down more than 2.5%. This reflects concerns about reduced global demand due to the trade conflict. Safe haven assets like gold have also been impacted. The price of gold has tumbled more than 4% since Thursday, falling to around $3,030 per ounce. This suggests that investors are seeking safety in the face of heightened economic uncertainty. President Trump, however, has remained defiant, dismissing concerns about the market turmoil. He has characterized the tariffs as medicine necessary to address unfair trade practices. While expressing a willingness to negotiate with China and the European Union, he has insisted that they must take steps to reduce their trade surpluses with the United States. The escalating trade war has injected a significant dose of uncertainty into the global economic outlook. The potential long-term consequences are difficult to predict with certainty, but could include slower global economic growth. The trade war could dampen global trade, investment, and consumer spending, leading to slower economic expansion worldwide. Higher prices for consumers. Tariffs on imported goods could lead to higher prices for consumers, potentially fueling inflation. Disruptions to global supply chains. The tariffs could disrupt the complex web of global supply chains, leading to shortages and delays in the production and delivery of goods. Increased geopolitical tensions. The trade war could exacerbate geopolitical tensions between the United States and China, as well as other trading partners. The world is now watching anxiously as the trade war unfolds, hoping for a resolution that averts a full-blown global economic crisis.